The market's been shaking, big headlines are dropping, and I made some major financial moves this month. Not only did I adjust my investing strategy, but I also took on a $21,500 auto loan, something that's definitely changed the way I approach my finances. My portfolio still made progress, closing out February at around $16,740, up from $16,380 at the start of the month. Since taking on the loan, my monthly investment contributions have been scaled back to about $700 instead of over $1,000. But I'm making every dollar count and sticking to my strategy. And with all that bullshit pushed to the side, let's get right into the portfolio breakdown.
Wow.
So let's break down my portfolio. My largest holding VU is sitting at around $8,240, while the S&P 500 had a strong start to February. It sharply dropped after the 18th and has continued to decline into March. Even with that volatility, I'm still up $620 in unrealized gains, and it's bringing in around $100 a year in dividends at a 1.2% yield. If the market continues to dip, I'll be adding more. VU took a hit, but that's expected in a market pullback. It's still my biggest position because the S&P 500 has always bounced back over time, and I'm here for the long-term growth. Then there's SCHD, currently valued at around $4,870, and it's up about $310 in unrealized gains and generates around $170 per year with a 3.5% yield. SCHD held strong while VU struggled, cushioning my portfolio against larger losses and proving its role as a steady income generator in uncertain markets. SCHD's resilience didn't just soften the blow, it kept my portfolio performing better than VU, showing how reliable dividend-paying stocks can offer stability when the broader market is shaky. SCHD has been a strong performer for years, and its ability to weather volatility is why I continue adding to it. Next up is VUM sitting at about $3,560. My unrealized gain on this is around $360, and it's bringing in about $90 annually with a 2.6% yield. VUM has also performed well, complementing SCHD's stability and adding another layer of resilience to my portfolio while VU lagged. It provides a broad mix of dividend-paying stocks, which means I'm getting cash flow while still benefiting from stock appreciation. This balance is why I think dividend ETFs deserve a place in most portfolios. They bring steady returns even in uncertain markets. Lastly, there's VTI, a small leftover position worth about $60. It's up slightly and it pays about $1 a year in dividends. It's really nothing, but still worth mentioning. I've debated selling it at realized gains, but due to taxes, it's not a viable option right now. And while we talk about positions, we need to talk about the allocation. VU makes up 50% of my portfolio, while SCHD is 28% and VUM sits at 22%. Together, they generate around $360 in annual dividends with an overall yield of 2.2%. But what about my year-to-date return? Well, it's at around 2 to 3% with a gain of 0.37% last month, reflecting steady gains in reinvestment. Since inception, my portfolio has grown by 17.23%, proving the impact of steady investing and sticking to a disciplined approach. When it comes to cash flow, this month was straightforward. I started February with about $400 in cash, deposited another $700, and invested nearly all of it. I also withdrew $400 to put toward the down payment on my car, which was a necessary move to finalize the purchase while still keeping my investments on track. By the end of the month, I had just 37 cents left in cash. Even with the loan, I'm making sure to stay aggressive with my investments because slowing down now would set me back long term. As usual, I'm fully invested with no idle cash sitting around. I don't like sitting on cash for too long, so I'll be looking to deploy it quickly into anything I see as undervalued. Zooming out, my portfolio remains fully allocated to stocks and ETFs with no exposure to bonds or other asset classes. One thing I'm always keeping an eye on is my allocation and when it makes sense to rebalance. My general rule is to keep VU at 50%, but if it dips below 49%, I start adding more to bring it back up. SCHD and VUM naturally fluctuate, but I make adjustments based on performance and market conditions. This strategy keeps me from overexposing myself to any single ETF while ensuring I'm putting money where the best opportunities are. Even with my reduced contributions, I'm still making steady progress. The value over time chart tells the full story. Starting with just a few thousand early last year, growing steadily throughout 2024, dipping in December, and now climbing back up in 2025, month-to-month movements don't matter as much as consistently adding to my investments. This isn't about timing the market, it's about time in the market. With my portfolio set, let's zoom out and talk about the bigger picture because the market hasn't been quiet. The market has already reacted to new tariffs announced at the start of March, with a correction shaking things up. If these tariffs remain in place, we could see further downside, especially with the possibility of reciprocal tariffs set to take effect on April 2nd. If things keep dipping, I see it as a chance to pick up more shares at a discount. Some investors see these economic shifts as a reason to panic, but I see them as a reason to load up. Dips like these create some of the best opportunities to grab high-quality assets at better prices. A lot of people ask why I stay consistent with my investments, even when the market is uncertain. The truth is, I've learned that sticking to a plan beats trying to predict every market movement. There will always be news, volatility, and uncertainty. But if you have solid investments and a long-term mindset, none of that really matters. Every share that I bought yesterday, or I buy today, or tomorrow, is another step towards financial independence. And that's what really keeps me going. So where do I go from here? The strategy doesn't change. I'll keep adjusting my allocations, rebalancing when needed, and staying consistent with my $700 monthly investments. My priority right now is making sure I continue growing my positions in VU, SCHG, and VOM while keeping my expenses in check. Even with the added responsibility of my auto loan, I'm not letting it stop me from building my future wealth. This update covers data up until the end of February and does not reflect any movements in March. No matter what happens next, I'm going to keep doing what I do, sticking to the plan, and taking advantage of whatever opportunities come my way. And as always, guys, I appreciate you for keeping up with these updates. If you've been watching my journey, you already know how this goes. Follow me on X at MushT. Make sure you guys like and subscribe. Maybe turn on that bell for notifications. I'll see you guys in the next video.